Hello everybody, thank you very much for joining me this September the 4th. It's about 4 p.m. here in Istanbul, Turkey, and we've got a lot of things to cover today. My name is Philakone Crypto, and I'm here to provide you with top-tier technical analysis from the perspective of a professional day trader and investor who's been in the game for 7 years now and have seen the majority of all bull and bear markets. So hopefully with my advice, tips and tricks and non-financial lessons, it can provide you with an opportunity to increase your skill base and hopefully be successful in the next bull market to come. So today we're going to cover a wide range of topics ranging from where I think the bottom could possibly be, what the crypto market is doing in general as a whole, and what it's currently doing right now short term. So thank you very much for joining me today. So let's get right into it. We're going to talk about these 6 points today. Where is a potential bottom for Bitcoin? What Bitcoin is doing right now? How the economy is affecting Bitcoin? Increasing your skill base? Using the bear market to learn? And the necessity for cash on hand. Last video that I put out was talking about Benjamin Cohen's Bitcoin monthly returns table. And it was showing that September is generally a very bearish month. And in fact, we've had a bearish month for the past 5 years in a row now, running from 2017 to 2021. It doesn't necessarily guarantee that this month will also be bearish, but it does imply that there's a high probability that the trend could continue. Therefore, don't be surprised if we do end up having a fairly bearish September. But the good news is that in October and November, these months generally provide a very positive return, though the data is skewed considering the majority of this data is from before the bull market in 2017. Not only that, in October here and November, the large numbers of percentage gains were from 2013. So despite this being a great table that shows the monthly returns per year, of course, take it with caution. You just never know where this month could end up, or October and then November as well. So according to many economists and professionals out there, Bitcoin is correlated to the NASDAQ to about 80%. And based off of many world macroeconomic factors right now, it's really difficult to see Bitcoin or cryptocurrency in general hit some new highs. I don't believe that new money from institutions or retail investors will be injected into the market because this recession is underway. Many professionals out there are predicting one of the worst recessions that we've had. These interest rate hikes are not going to stop. I don't think that 6 months of headlines and inflation rate hikes are really going to fix the majority of problems right now. War, natural gas prices going up. My personal bill is going up by 2 to 3 times. And in Europe right now, there's some major issues, very basic needs that are not being met right now. In America, I cannot see a soft landing. I'm no economist. I'm just regurgitating a lot of the information that I've been reading and learning about. But because of regulation as well, it's difficult to see regulation in crypto being a major priority that's going to take place anytime this year or early next year. But like Kevin O'Leary has mentioned, that once regulation comes into play, as Kevin O'Leary mentioned, that stablecoins are most likely to get regulated first, he's expecting billions of dollars from institutions to start investing in cryptocurrency. Right now, as it stands, it's difficult to see this market cap getting any higher right now. We see that the market cap is a little under $1 trillion. The highest that we ever saw it was $3 trillion. The fair market valuation of crypto right now as a whole is about $1.45 million based off of Benjamin Cohen's model, using his logarithmic algorithm to show fair market value. And there's many times where we've trended below this fair market value for anywhere from a year to 2 years. So I personally just cannot see crypto going up right now and rallying based off of many economic factors affecting the world and because of regulation that's slowly going to come into play. But know that if you can actually be in the crypto space and hang on for a few more years, perhaps, it's going to massively reward you. Cryptocurrency was created for a reason. It was to fight against things like being able to print off an unlimited supply of money, to be much more transparent than the government actually is right now. We have to remember the fundamentals of crypto and Bitcoin especially. And if we remember these fundamentals and if we factor in the historical rallies in the past before, we can safely assume that crypto's not going anywhere at all. It's here to stay, it's going to stay, and it's most likely going to hit $100,000 down the road. So my opinion is that right now, we're most likely not going to hit a bottom anytime soon. There's going to be a very slow period of dropping. If we take a look on a technical perspective, we see that for July and August, we've already seen these massive drops over here where it got rejected at the Fibonacci exponential moving average of 55, 2 months in a row for July and August, ending these months very bearishly. Also, when you factor in Benjamin Cohen's model of his BTC monthly returns table of how Bitcoin has been very bearish in September, we see that for 5 years in a row, Bitcoin has trended very bearishly. It doesn't guarantee that we're going to get a bearish month, but of course, historically, it's more likely to happen than not. So where is the potential bottom for Bitcoin? Taking a look at Bitcoin on the monthly chart and based off of the volumetric profiling as well, we see tons, which I don't have enabled here. We see tons of price action around this range between say $12,000 to $14,000. We see for the open and the closed here for the high in December of 2017. And all these regions above it are basically bull trapped regions above 13K, hence the wicks there. And also we see it touch one more time here. So from a technical perspective, we're seeing that a potential bottom could be about $13,700. But if we take a look at the path right now, are we just going to free fall here by the end of the year? Not likely to happen in my opinion. But we do see these bearish candles, and based off of price action, of course, it can just take its sweet time. We don't know how long it's going to go into, but of course, this could go well into 2014, in my opinion, where this bearish market could last for literally a year and a half. So right now, in my opinion, based off of the fair market value pricing and how much we've deviated from there and historically how long we've stayed low in these particular regions before, well, it's safe to assume that there's definitely a possibility that we could trend further and stay in those regions for a long time. Taking a look at the BTC Dominance as well, what we're seeing is that these are the lows that we've observed before. Okay, all the way back to May of 2018, and then we see May of 2021, September 2021, and December, January. BTC's dominance was always well over the 40% range. In fact, it held for a very long period for about 1,614 days, which is about, you can say 4 years and 4 months so far. But as you can see, Bitcoin's dominance is really taking a nosedive right now. And it seems like we're going to be hitting the possible lower ends over here, where a bottoming for BTC dominance could be at 35%. That would be the extreme case if we were to reach those lows. Moving on to the crypto market cap. If we take a look at the market cap for Bitcoin and where we have historically held before, and this is going all the way back, we're seeing that in January of 2018, right after the bull market in December and 2017, that hit a peak of about $750 billion, or 765 to be precise. And then if you take a look at the low here in June of 2021, we reached that market cap and we ended up bouncing above it. So the question is, are we going to break below the $765 billion market cap? And if we do break below it, we see that the trending 55 EMA on the bigger picture here is going to be broken very soon. This is the month that's going to decide, are we staying above it, below it, or right in between? In my opinion, unfortunately, I'm bearish based on all of these factors that I've mentioned before. I just cannot see money being injected into crypto based off of the economy that's heavily correlated to the NASDAQ. If we take a look at the next bottoming for a potential high, or a support rather, we see it reaching down to $389 billion. So that's on the big picture and where a potential bottoming could be. It could be at $389 billion and close to around 85% of a major drop, going down to 12 to 14K. That is my prediction. And let's get into what BTC is doing right now, okay? BTC on the monthly right now is looking bearish, right? It's got this nasty candle that's consolidating, looking to continue its momentum to the downside. On the 2-week chart here, yes, we see some of this histogram at MACD going to the upside, but we don't see any positive and massive momentum going to the upside yet. We still see this RSI that's acting as a resistance right now. Is it going to break above it? This resistance that we see on RSI has been held strong since October of 2021. And right now it's been a fairly long range already of almost 10 months on the 2-week. So if it breaks above that RSI range as a resistance sloped, we could possibly see a small bull run, but I still see it continuing to the downside. On the 2-week chart, we've seen this gigantic red candle that drops 22% right now. And it's only 4 days into the new week and into the month, so it's very difficult to gauge these higher time framed candles. Looking at it on the weekly, it's trending to the upside, but keep in mind that these are lagging indicators. Now, I hope that I'm wrong. I would love a bull market because it's much easier to make some profit and make big returns when it comes to a bull market, right? You don't need to be very skilled, in my opinion. You can buy just these popular coins, hodl it, and in a few months' time in a bull market, when you see golden crossovers everywhere, you can potentially profit immensely. So right now we're seeing that if I were to turn on this EMA for you, let me just turn on the 200 moving average here. If I go back to the Bitfinex chart, so on the 200 moving average right here, okay, that's a good one. I'm going to delete this guy now. Actually, I'll hide this one. Give me 1 second. So we can see this death cross that's already happening on the 4-day. Has not death crossed yet on the weekly chart. In fact, we have golden crossed over pretty much since, you can say, 2016. If I were to interpolate it backwards, we've always maintained where the 200 moving average is below the 55. So if we take a look on the daily, all right, this is going to give you a really good idea of how bull markets are when it comes to golden crossovers. A golden crossover is when the 200 moving average ends up crossing, hiccups. It's crossing below. The golden crossover is when the 200 moving average ends up crossing below the 55 moving average. So we see that the 200 moving average is now supporting the 55. So when this crossover happens, it could be a big buy signal for people to invest long term. They would wait for a big rally and then a dip coming to the downside, and they would buy near the 55 EMA. And you basically ride it until you get a bearish crossover. So taking a look here, we see it crossed over. You would enter around the 55 EMA. So that was around $300. And if you were to ride it until the strategy ends up failing, you would have sold it near around here where it crossed over, But you could have, of course, anticipated that it was going to cross over again, right? So you would have realistically, following this strategy, sold around $6,000, $7,000. Sure, you didn't catch the top at around near 20K, but at least this strategy prevented you from selling it at 1,000, 2,000, 3,000, 4,000, 5,000. So you would have made a gigantic return here of roughly 2,000%. So it's not the best strategy and only strategy to use. Of course, it's important to combine it with other strategies as well, such as RSI, with also MACD, and of course, I love Elliott wave theory as well. So on the short-term picture right now, we just see Bitcoin trying to break down. I do not see it any other way right now. I see the support around here, around $19,550 range. I see it wanting to smash down. I see the momentum as well. But one thing we got to talk about is how the 12-hour is going to the upside, and the daily, of course, is also going to the upside. But what I noticed about this is it looks more of a concave shape that could easily reverse around. So on the short term, yes, we might see some bullish runs and some green days for short term, which could be great for day traders. As long as there's volatility in the market, of course, there's profit to be made. But for the long term, I just cannot see crypto going up for a while. Major names out there right now are fairly bearish, but it doesn't mean that we have to follow them and be bearish as well. But I just take that into account, that if these people who are owning billions of dollars of crypto are fairly bearish right now, to the point where they're actually selling their cryptocurrency and unloading their portfolios, it should be a sign that, hey, the market's not looking too hot right now. These people have been in the market for a long time. They're much older than me. They're much smarter than me as well. They're much more educated, and they're playing with a gigantic amount of money compared to what I'm playing with. So it's hard to believe that crypto is going to have some major rally. Despite people are buying on the dips right now, don't get me wrong. I'm still going to be dollar cost averaging, but smaller amounts. As the price gets lower and lower, I will be buying more and more with bigger quantities. When it gets to the low of the 17,000 range over here, I'm going to be buying at least 2 to 5 more Bitcoins combined with about 10 to 20 Ethereum. Anywhere between 50 to 100K, I'm going to buy at these particular price points. And then when it gets to 15 to the 12K range, that's where I'm going to start my heavy accumulation for the long term, because I expect Bitcoin to eventually hit $100,000. And if it does hit $100,000, to be quite honest, I'm most likely going to retire from crypto, just hold long term and find some adventures elsewhere that I'm very passionate about. I'm still very passionate about crypto, don't get me wrong. But of course, it's life-changing type of money. If Bitcoin ends up hitting 100K, of course, for a lot of people, they're going to be excited about it, and you're going to get an opportunity to do some other things. So that leads me into the next 3 things. Increasing your skill base, using the bear market to learn, and necessity for cash on hand. Right now, during this bear market, that's where you're being tested, trial by fire. You're thrown into the deep end of the water. You don't know how to swim. You've never seen a bearish market before. And these are the times that it's incredibly scary. So I remember my first bear market was in 2018. Just to reference it here for you. It was where I lost $90,000 in one trade. And that was a fairly scary time for me right here. On this day right here, guys. Yeah, I longed Bitcoin, all right. I literally longed it trying to catch a dip. And that day was one of the biggest drops that I've seen in a very short period of time. Okay. I lost $90,000 that day. I was playing a really gigantic position and I was leveraging ×3, and it was over 7 figures that I was playing. So it was one of the worst days that I've seen. Like, I weathered this just because I wasn't there for it. Coincidentally, I wasn't even looking at the market that day, and that would have made me panic if I saw this candle. I was out for some Christmas dinners, But this one here, I tried to long it near $19,000. I'm not kidding, guys. No, it was 18,250 or so. I thought it was going to keep going, right? I remember drawing this trend line just kind of like that. And I remember like, yeah, it's going to probably bounce somewhere above there, but it just ended up going down. Huge drop. And I was just devastated. And I'm sharing this lesson and experience with you because I'm letting you know that if it's your first bear market, don't be surprised by how these conditions are. It's really difficult to trade right now. It's hard to find good setups. In a bull market, it's not that difficult. You just have to buy pretty much any coin, as Bitcoin has golden crossed over, like I showed you before, and you just ride it and ride it and ride it until you're starting to see signs of it slowing down, which I'll talk about in another video of how to identify potential tops. And once this happens, you can make a lot of money in a bull market. Keep in mind that in the bear market, you cannot make more than 100%. It doesn't matter what the price is at. It needs to go to zero to make 100% profit. Luna Terra was a great example where a lot of people shorted from the top and they made a gigantic amount of money shorting to the downside. And then if you look at a bull market, coins can actually rally well over 1,000, 2,000, 5,000, 10,000%. To give you a really good example of a coin that we've seen recently last year rally absurd amounts would be Axis. Axis did a 10,000% rally in about 2 months. That's it. And Axie Infinity, of course, it was followed by a major decline of 92%. Would you rather trade a market that's going up about 10,000%? Or would you rather trade a market that's going down 90%? The answer is pretty clear. A bull market is definitely going to be much more profitable. Although I used to prefer bearish markets and shorting, but I've learned very quickly that there's a lot more risk in the bear market and you got to be much more accurate and careful with your positions. The caution is what allows you to stay in the game. The bear market should be used as something to learn. You should be spending your time wisely to increase your skill base, to increase your knowledge base, because this is the time that you should be learning. You don't want to be learning when the bull market comes. When the bull market comes, you should be using that time wisely as your final exam, you can say it, okay? It would be your final exam where you're just trading and you're finally just being tested. During the bear market, it's homework, guys. You got to put in that time, do the homework, study, make sure you're back testing a lot of things. Use this time wisely, because if you don't and the bull market eventually comes, you're going to regret that you did not put in that work so you could have a successful bull run. And in my opinion, during these bearish markets, it's important to find cash on hand, keep cash on hand, or make more cash so you can have more on hand. And this is extremely important because when it comes to dollar cost averaging, you don't want to put your eggs all at one particular price point. In my opinion, it's always, and based off of my experience as well, not financial advice, but it's way better to buy at specific price points in intervals as it keeps dropping, because you're never going to be able to catch the bottom. My intervals will be 17.6, around 15, and then all the way from 14 to whatever it is. And they're going to incrementally increase as well. So for example, if I have 100% of anything, I'm probably going to buy maybe 15% at 17.6. I'll probably buy 20% at 15,000, and then below 14,000, that's where the 70% is going to be added to my portfolio so I can get a higher amount at a cheaper price. So make sure you're keeping this cash on hand. I highly recommend to not take unnecessary risks trading in this kind of market and trying to force these setups that may not be existent rather than letting the market come to you. It's going to cause a lot of issues long run, and you're going to be taking on way more risk than you should, taking unsafe trades, low probability trades, and it's just going to destroy your portfolio and your most important asset, which is your capital that should be protected and preserved so you can grow it. So right now in the bear market, understand that there's not a lot of wiggle room to make imperfect trades. You got to be a lot more precise to make money in this type of market. Because if you're not, it's going to really affect your bankroll for trading. So understand that this bearish market is used to learn. Profiting in the bear market, day traders, they can still do it in the bearish market. But of course, you got to exercise a lot more caution, got to play with lower sizes as well. And I highly recommend to save that cash on hand for when prices lower. So you could potentially invest in it long term if that's the decision that you choose to make. So I'm going to end the video here. If you enjoyed this new content of mine, I'm just trying to make higher quality videos. Please give me a like, a subscribe, and hit the notification button if you decide to subscribe to my channel. And you can always change your mind down the road if that's something you choose to do. So thank you very much for joining me today. And I hope you have a fantastic rest of the week. Bye.